From SS, if you're in the chat, good morning. How can you say that the price stays out of the gap, but then that it says it gets trapped in there? This is an amazing question. We talk about gaps and supporting gaps all the time here using the volume profile. It's a great question, and I have some examples to walk us through when a price can be exercised into a gap, when it can use it as support. And of course, it all goes around the health of the chart and if there is a catalyst. So I'm going to show you real quick for those of you that have no idea what I'm talking about when I say gap support. I'm looking at the volume profile here. This is right on the side of my screen, the blue and yellow. And we have these nodes here, right? We have these nodes, and then we have gaps, all right? And so what happens is on a healthy looking chart, and this is Lululemon, okay? Very healthy looking chart. Price can obey a gap. It doesn't want to go into a gap. So it's either going to use that gap as support because it doesn't want to go in there, or if there is some sort of major catalyst, it can be sucked into the gap and fly right through in there, all right? So that is what I'm talking about when I'm talking about gap support and how it can fly through. Now, sometimes on a catalyst, you get this phenomenon where price will fly through the gap and then it gets stuck in there and it will trade within those nodes for sessions. And this really cool phenomenon happens where the gap can start to close. So I'm going to walk you through some other examples, okay? We were looking at Clorox yesterday. Extremely, extremely healthy chart here. Extremely healthy chart. Okay, so here's a very healthy chart in Clorox. Chris Johnson and I were identifying this as a bullish uptrend that just broke out of a major pattern. So we're using these gaps instead because of the health of the chart, almost like a step ladder. All right, so we're going through this gap, right? We just like look at this giant candle, fly through the gap, and then we're using that as a gap support at the bottom of that node as a support. And you're gonna see something like this. You're gonna be using these gaps in this scenario, almost like a step stool. And it's gonna go like this until we get to the 200-day moving average. This is Clorox, and that was our first target, okay? Then if it breaks out of a value zone, that's an entire new trade. But again, this is a healthy looking chart. It just broke out of a major bullish falling wedge on volume. So that's how we would identify these gaps. Now let's look at something like AFRM, AFIRM holding. We were talking about this one yesterday. So there wasn't an earnings as a catalyst. Instead, they have a competitive catalyst. Apple and Amazon are attacking them. They're making their own thing that should put AFIRM into some trouble. Regardless, it's sold off on the news, and you could see it was kind of trending. Here's the gap, everyone. Here's the gap. It was trending right around that gap, right? It was using that as support. But then your friend is your friend until it's not. Instead of an earnings catalyst, we had this bad news catalyst, and that drove us perfectly through this gap. So my prediction here, and I have to see how it trades for a few days, is because it got through this gap and it's not necessarily going lower, we're going to get what's called a gap trap. And it could trade range bound in this gap between, I would say, 53.76. I know I get really specific. We could say 54 and about 62 in this gap. And we saw something like this exactly happen with INTC. I'm just going to wrap this up real quick. I wanted to take you through how this phenomenon works and what scenarios it works. Intel, INTC, Intel. All right, let me drag this over. So Intel, there was actually a huge gap right here in Intel. There was a huge gap, all right, between these nodes. There was a huge gap. Intel had bad news bears right here. You can see where the volume kicked in. I don't remember exactly what the bad news was, but it was some sort of catalyst that took it through that gap. And I quickly said this is going to be a gap trap, also because we have the 200-day moving average there serving as support. So you can see Intel started trading sideways in here, and look at this node that's developing. We're getting that closure. The gap is closing because we're gaining value in this area. So again, you could be creative with options here. You can, you could do a strangle here or an iron condor, or whatever you can do to take advantage of a price not going very far out, right? Kind of just staying within range. Or you can just take a look at this really cool phenomenon and seeing that volume node